folks, Dan Frio here, the Mortgage Update. I want to do this alert to everybody out there. If you were on the sidelines hoping that mortgage rates would come back, call me now, email me now. I'm at the office. Let me tell you what's going on. We just surpassed the lowest mortgage rates in history. Okay, let me backload this and tell you what's going on. Basically, the Fed came in and said they're going to do anything with no limits to support the markets. Part of that this plan is to stabilize mortgage rates because people on Wall Street in the government realize the housing market is basically the catalyst to everything. It's employment, it's raw materials, it has to do so much with the economy that it's kind of scary. So they just announced this. So what's going on in the market? Well, it pushed rates lower than they've ever been in history where we were 2 weeks ago. All right, so let me break this down. I follow the markets, as you guys know, on a daily basis, kind of meticulously. And let me explain to you where we are, where we were, and then some measurements to be. Where we are right now is right in this range here. You can see the MBSs are up 78. That's phenomenal. Okay, phenomenal. Where we were down here. The rates spiked over 1 full % in the matter of a week. Okay, why? Well, panic in the markets. The stock market plummeted. Taking along with it everything: mortgage-backed securities, treasuries, corporate bonds, the whole ball of wax. Everything got thrown out with the trash. Everything. Okay, so I locked in rates right in this range on almost every client that we had. What happened that day is there was a spike, and mortgages hit a number that I've never seen in my life. And then all of a sudden they pulled back. And I yelled out to my whole team, lock everything we have, because I figured this was going to be our bottom. It was for a long time. So we were locking in rates. Let's just round them to like 3% on 30-year fixed. By the end of the week, they were at 4 in the mid 4s. That's how dramatic an increase rates went. Now, I had clients that were on the sideline that were like, I don't know what I want to do. We didn't have their full application. They didn't give me the go-ahead to move forward. So when they keep calling me back, they're like, Dan, where are we with rates? So that's why I want to post this out to all the clients out there that watch me on a daily basis. Don't miss this one. I can't say anything else, but if you miss this one, it's your fault. And I'll watch this for us and grab these rates, but I'm not going to grab them. Again, I always follow the trends. So if we're possibly going to get a little bit better with rates, I won't lock you in, meaning I'm not going to grab that rate and solidify it. Why? We might be able to get a little bit better. However, as I always say, pigs get fat, hogs get slaughtered. So if I pull your information up and last week we were at 4.25 or 4.5, and now I can get you 3, I'm not going to ask anymore. I'm going to say, you know what? If you don't take it now, I give up. I give up. We're not going to hit the ultimate low. I'll try my best to do that, but we're not going to. Okay, so here's the technicals behind a lot of this. Basically the Feds said they're going to jump in and do everything they need to stabilize this market. Okay, so that's that. So now let's get to the technicals on analyzing the data. We follow lines that are called Fibonacci levels, and we follow moving averages. Okay, so the Fibonacci levels basically create a range that we should bounce between. Think of it as your little kid bowling. You took your kids bowling, and they throw gutter balls all the time, so you put up those bumpers so they go boing 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 boing, kind of like that. That's what the Fibonacci levels are. It creates basically a floor and a ceiling on where we should be trading in normal markets. Well, it's not normal markets, but at least gives us some guidelines. So then we also go back and see what moving averages are going along. So those also play a key role in a lot of this. And Friday, when we went through this, we were moving, here, let me add another one in here. We were moving between these lines, and we surpassed this 25-day moving average. So I'm thinking, well, you know what? I see us moving in this range, I was thinking we're going to trade between here and here for a while. Okay, basically because we're looking at a moving average in the middle and we're looking at a Fibonacci top. So those are the two things I'm monitoring. Okay, but the fear is jumping in, and you can see this running again. So we might be able to pick up, we're going to probably pick up even better rates than way down here where we were. So let me get back to this. Okay, so the Fed stepping in saying, we're going to do everything and anything to stabilize this market. So rates opened up and they open right here. But unfortunately, none of the trading desks, everybody is short staffed on Wall Street, mortgage-backed securities, at the pricing desk, at most lenders, even our company, because of this huge volatility, we kind of pause a little bit to see if the dust is going to settle. I'll say it that way. So mortgage rates aren't published yet, and it is 10 o'clock my time, right on the button at Central Standard Time. So, and they've eased off their highs, so they're in this range, okay? I locked almost all my clients right here. Let me give you an idea, though. We might get back to the 3% or 2.875 on a 30-year fixed, but there's margin built in because of the volatility of what's going on. We might hit there, we might not. I can see us getting into the 3 1/8 range on a 30-year fixed. If you're at 5, which I have some clients there, they're saying, I still want to hang on. I'm at 5.5, but I want to hang on to see if I get 2.75. I would highly suggest if we can get locked in at 3 to lock in at 3. Because if you miss this, it could go up as fast as it went down. Okay, so let me explain this to newbies. What I follow here on the channel is this number right here. So it's the price of a mortgage-backed security. Okay, basic economic terms is supply. The Fed is creating ample demand. So because the demand is going up rapidly more than supply, we have a price increase on mortgage-backed securities. Okay, so how all this works, how does this tie into mortgage rates? Well, as the price of this bond increases, you're paying more for a bond, thus it's giving you or us a lower rate of return, a lower mortgage rate. We love when this number goes up. There's an inverse, we call an inverse relationship between the price and the yield, okay? So as the price goes up, the yield comes down. So we love this, okay? The problem that we face, though, is lenders saying, the rates, they're bouncing like this, and we don't like that. So we have to throw in a little bit of margin in this for risk tolerance. And also, there's a profit margin that lenders have to have. There's cost to do your loans. There's cost to service your loans, which is collecting payments and all this other stuff. So there has to be money. You're never going to see mortgage rates at 0. The federal funds rate is a whole different animal. And I have videos that explain the federal funds rate to you. Basically, what I'm saying right now is you just saw this run as I did the video. If you're out there and you're on the sidelines, I will monitor this for you, but I need you to put your applications in. So email me at dfrio. I made it a little bit simpler. D for Dan, Frio, F-R-I-O, at preferredrate.com, or call me at 844-775-LOAN. And we need to get your application in. From there, I will monitor this. But I promise you, pigs get fat, hogs get slaughtered. I will monitor this. And if I see that there's a bottom there and I can lock you in at 2.875, I'm locking you. A week from now, they might go to 2.75. I mean, that's the best I can do. If they go to 3.5 or 4 again, you're going to thank me. So please, if you want to jump on this, don't miss it again. Don't miss it again. That's basically, I'm trying to not be rude, but I'm just trying to be, just give you advice. So if you locked in with somebody else, last week, I told you I was holding because I expected us to come back in this range. This is another once in a lifetime event happening for you. Don't be a hog. let's get you locked in. Let's get you at the best rate we can. I'm going to leave it at that. I'll post later this afternoon to let you know what's going on. But please email me at dfrio@preferredrate.com or call in. We need to get your applications in. We need to pull your credit. We need to get you set. So when I'm ready to pull the trigger on this thing, when this thing starts to settle, we can lock in at the lowest rates ever. So I'll post later this afternoon. Thanks for watching. Give me a thumbs up. Share this with anybody and everybody you know that's looking for a mortgage. God bless. Be safe.